Well, it's a beautiful day in the neighborhood, but it's certainly not a beautiful day in my portfolio. Hopefully you survived this week in this massacre. But let's talk about it here on Friday after the bell. Greetings, and salutations to all my brothers and sisters out there. What a rough week it has been. It's been choppy, it has been down, and I tell you what, Friday was a brutal day. Today was a rough day on the market. Everything was just hemorrhaging red, and red was just floating all over the place. So hopefully your portfolio withstood this test that they're having. But really, we shouldn't be too surprised. I mean, the market's been running up like crazy. It's been going up and up and up. So to have a dramatic pullback, hey, we can expect that to happen. I mean, people's got to take profits at some times and shuffle things around and move to different positions. So let's not get too dramatic here. As I look at the heat map down here, really what we're looking at is a problem in technology, software infrastructure, computer hardware. These are the things that's really just getting tanked. I mean, your CRWs of the world and your microns and all these other things that have really run. Now they're having a little bit of a pullback. Is it a dip? Do people buy the dips? Absolutely. People have been buying the dips like crazy and been greatly rewarded for it, no matter what they're doing. No matter what they're doing. If they're buying calls, if they're selling puts, I mean, whatever the case, this thing is just going up. So don't get too sideways about this move and this bad thing in the market. And as we look at the numbers, pretty much we've got the SPY down 1%, IWM down 2%, the QQQs, which is your technology sector, you're looking at about 3%. So that falls right in line. But what we want to focus on here is not to look at the bad week. Yes, all of our stocks that we are watching in our watch list are down, so is everything else down. But that's okay, because when we put on our puts, we accounted for a little bit of a cushion. If it struck below your puts, well, then that's okay too. Who cares? But if you put on your puts at a reasonable timeline, this is just part of the action. You may have put them on for 3 weeks, you may have put them on for the 45 days, whatever the case may have been. But really, this is just 1 week in the trade. So just let it go. Just don't get too worked up about it. Now, hey, if you were getting sold or you bought your puts to end here on this day, if you sold your puts to here on this day, I mean, it was some crazy action for you. You might be getting put some stock. You might be getting some stocks at the end of the day. And you know what? That's okay too, because if you're getting into a naked put, you should be comfortable with taking on the shares of the stock. It is all, for me, I love the trade because it's a complete win-win-win. I mean, if I take the shares, that's okay. If I don't take the shares, that's okay. None of it matters. Yes, sometimes you get stung and get, a stock that really drops and get put to shares, but that's all right too. I've been put many shares and it's perfectly fine. You just start running the wheel strategy or start running a version of an advanced wheel strategy. And the next video is going to be great on that to really show you how to charge up your wheel strategy that you're running. But when you enter into these puts that you get into, or you say, let's just use the put, for example, when you get into this, if you get the stock, that's okay. You should be thinking about this trade as more of a long-term kind of thing. You're not just running it 1 time, 2 times. You're getting into a campaign. You're going to run that wheel strategy over and over and over and over again till the stock no longer cooperates. We're just not looking to get into a put over here and a put over here and a put over here, and then 1 week later find 3 different puts to get into. What we want to do is just run campaigns on these things, just like we've been talking about Rigetti. Righetti's taking a beating this week, which really isn't a beating. I mean, it's a beating for the week, and if you just look at it in that cross section. But the fact of the matter is, all my puts are still in good shape. Everything's still going fine. It's going to ride right around that 20, might dip down to 18, who knows? But even if I get all my puts sent to me, that's fine. And the SoFi is the same thing. SoFi had a little run up, now it's had a little pullback. Could I get put the stock? Absolutely. Do I care? Absolutely not. It's all part of the game and it's all part of the dance. So don't get too sideways of thinking you're only going to sell premium when selling puts. Selling puts, you're going to get the stock, and that's why the wheel strategy came about and was invented. But hey, let's look further. If the stock indexes like the SPYs and all these are down 1, 2, 3%, you can bet your portfolio may have just taken a serious butt kicking. I mean, you could be down 10% easily, 10, 15% even. And it's exactly that reason, days like today, that we preach so hard to keep your buying power in check. If your buying power goes negative, you're sunk. you're done. So now you have a huge down day. And let's say you could roll your position to get a credit, $1,000 credit on your position even. You can't do it if you're underwater because it's going to require you to give up a couple bucks for the trade. And if you don't have a couple bucks, it doesn't matter. They're not going to say it's only $2. They're going to not let you do the trade. So please make sure and preserve your buying power at all costs, or have a plan. If you have a low buying power, hey, I get it. You know, you're gonna run that risk and you're going to be at risk, but always have a plan. Say, if my buying power goes underwater, doesn't come up by the end of the day, then I'm going to go ahead and sell this option, or I'm going to go ahead and do this, get rid of this stock that I'm up on. But always try to sell, obviously, a position that you have credit on, because you don't want to start selling things off at a debit. It just exacerbates the whole problem. But guard your buying power for days just like today. But you know what? It's not all bad news. It's not all bad news, because there's going to be an uptick. There's brighter days ahead. Sunshine and rainbows and strawberries with whipped cream are coming. You know, this is just a Friday pullback. It's just a little bit of test of the market. You know, it's not a complete market pullback. As we looked at the heat map, we're seeing only those sectors. And as we talk about our watch list, as we think about it, we're starting to see a few names emerge as the top of the cream of the crop, if you will. The Rigetti is starting to look like a better choice. ONDS is starting to look like a solid, smart, small stock choice. RCAT, USAR, UMAC, all these are starting to emerge as the front runners, so we can start to tail off of some of the others that really have just kind of been, you know, not really that great. The volatility is still here, the premium's still here in these names, so let's just not get crazy, because right now with this huge pullback, it is a buying opportunity. If you want to buy stock, now's the time to buy the dip. If you want to go ahead and sell premium, now's a great time to do it. It's just like any other time in life. If you walked into Kroger's or a grocery store or any other place on earth and you saw a red tag on your favorite shirt, well, you'd rush over there to buy that shirt. Well, your stock's no different and the options are no different. If you have a huge red day and a big pullback, hey man, that's a sale. That's a time to get in there and get a great deal. So don't overlook that. Don't get caught up in my stock portfolio is way down and miss the opportunity of the pullback of all the stocks. So if you've got something in there, you can get in there to help your costs on your credit or your credit spreads on any option. You can get in there and buy more stock to help your overall cost, dollar cost average, if you will, on stock positions that you may have to lower the overall cost on them. All these things are possible. Now's the time to buy. You don't want to buy high and then hope for the best. If it pulls back, yes. If you get a 5%, 10%, especially a 20% pullback, dive right in there. Get in. Do not be afraid. The water is absolutely warm. Everybody else may be running, but that's the time we need to be rushing in, because when it pulls back is no different than any other sale, anytime on anything else. So get in there. Get yourself something. And, you know, just do something. You don't have to just sit on your hands. Think about your defensive positions. Think about what's going to happen. Right now gives you good opportunity to maybe flex your muscle in your defensive skills of your options. Are you adding a leg to it? Are you selling another option against it? What are you doing? But just don't be fearful. Yes, a market pullback. Yes, it sucks. But you know what? Nothing's a theoretical loss until you close it. Then it's a permanent loss. So for now, it's just dollars, and it's not even real dollars, but they can feel very real. So, hey, I hope your portfolio does really well. I hope you have a fantastic week. Don't let these big red days be fearful. Let them be an opportunity for you to get in there and better your positions. So it's okay. Everything's going to be all right. And I hope you have a great week of trading next week. I hope the market pulls up a little bit, but if not, we'll be prepared for it. Thanks for joining me here this week on Friday after the bell.